I need to start with like a very, 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 very profound question, which is, so where do we draw the line between SoCal and NorCal? Is that Santa Barbara or above?
I would say it is above. I mean, I've heard kind of Ventura county line is sort of the end of SoCal, and Santa Barbara is considered Central California. For me, I feel like everything changes really dramatically just north of Santa Barbara. And I would say if we took a line, because really what defines California is this big bite, right? Where the
Yeah.
coastline turns very in, and then by the time you're in San Diego, you're quite a bit further east than San Francisco. So I would say that Southern California bite, that kind of natural landscape creates Southern California. I think Santa Barbara's a bit in a transition because we have the mountains very close to the ocean and our coastline faces south, which is quite unique in California when the majority of the coastline faces west. So, but just north of Santa Barbara and Goleta, that's really where you get into Central California. And then by the time you're up in Big Sur, then I would say you're very much in Central California. And then when you get north of the Bay, then I would say you're in Northern California of San Francisco. But I'm
Uh,
no native Californian. I think everybody has an opinion about that, probably.
so you're from
Born in
Indiana or Idaho?
Wisconsin.
Oh,
Well,
Wisconsin.
born in Madison, Wisconsin. And then we moved to Sun Valley, Idaho, when I was 10. And so I grew up in the mountains of Idaho and then came to Santa Barbara for college at UCSB. And then made my way back here kind of 20 years after graduating college with my wife and young family to enjoy the climate and landscape and
The
ocean.
sun.
And we kind of had enough of the mountains and cold long winters, and we're ready to visit the mountains and live on the beach. And that's what we're doing.
Yeah, I was about to leave that part later on when we're talking about fires and how a guy that most of his life and was surrounded by snow, and actually you were professional skier, and then the transition to the sun and the beach. You kept a little bit of let me be unstable, so instead of ski, now you're on surfboards. But we can talk about it now, but we can
Yeah.
also talk about fun stuff later on. But it's always a great analogy because you also kind of partake in Olympics or Junior Olympics and stuff like that. And that will be actually great question. For usually the last question is, do you have any tips, lesson learned over your career or something that people should talk about? But we can actually start with that. So anything that propagated from your time as a professional or Olympics, is that professional? It's not professional, but
No, Junior
the
Olympics is very
community.
much, yeah, amateur, but it got to be really a big piece of my life and identity, and the connection to physical action and risk became quite I became quite attached to it. And that
Mhm.
feeling of, I call it freedom, of gliding, of using just gravity and nature to create sensations and feelings. And I mean, I still get emotional about talking the connection between good ski run and how that makes me feel, or a good wave, or good snow. Um, and it raised you traveling because these mountains were spread out across the West, and so starting from a fairly early age, I was traveling alone or with my twin brother often to go to these races with coaches who were just out of college themselves and loading up in vans and driving all over the West and getting to go to these different mountains and ski resorts and compete. But it was really more about being with our buddies and friends, and the competition didn't get too serious until we were in high school. um, and then it became quite all consuming until I sort of checked out and had enough of racing, burnt out on it, and found a pair of, it was right when the skis were getting wider. I'm not sure who remembers those days, but there was a major shift in the equipment right around the late 90s. And that coincided really well with my ski career because it opened up a whole lot of opportunities in the backcountry up in Alaska. We got to do some really intense heli skiing up there. And then my brother and I came up with this idea to do a drive from Alaska to Chile.
No
And
shit.
as soon as we graduated college, we threw the skis, kayaks, surfboards, all the different recreational tools to go explore what we were calling the watershed, which
Uh-huh.
is the interconnected system between the snow and the mountains, the water in the rivers and the river canyons, and the sand and ocean beaches and landscape. And when they're all working together in a system, they create a lot of beauty and also recreational opportunities. So we spent a little over a year doing that trip from Alaska. Got the car all the way down to Panama, and then it was too big to put on a shipping container to go around the Darien Gap. So we
Yeah,
ended
I
up
was I
leaving the
was
car.
I was looking for that. I was like, how
Yeah,
did you pass Guatemala? But
yeah.
yeah, no, yeah,
You could get all
uh,
the way down past the Panama Canal, and then the road ends, and it's this place called the Darien Gap, which is kind of a roadless area between Panama and Colombia. Um, and the technique is to put your
all
car on
right.
a freighter going from Panama to Ecuador. But what we did was just left the car with some friends in Costa Rica because that's one of the few countries you could leave the country and your car could stay in the country. And then flew down to South America and continued on.
Okay, now I'm completely envy. So that sounds like such
Well,
no.
it's a
It
part of the story, and it's worth telling because it launched
it
me into
does.
journalism and adventure traveling, and I spent a big part of the next decade and a half, almost 2 decades, traveling all over the world, doing interesting things, meeting interesting people. Um, but really, the exposure I got into Wildfire to kind of bring it back to what
Thank
we're talking
you.
about
Thank
here
you. No, no, no.
is
I do
being
appreciate that.
assigned a story as these wildfires started to threaten towns across the western region. Sun Valley, Ketchum, Idaho was threatened a number of times in 2008 and I think again in 2011. We had fire come very close to town, come onto the ski resort itself, and it was a pretty impactful experience. And I was also asked to cover it as a journalist, so I was able to embed with hotshot teams and go to smoke jumper trainings and learn and be kind of behind the scenes while these fire professionals were trying to save a town, really. And it gave me a lot of passion and insight into wildfire. And I didn't know exactly what I would do with it besides writing the stories and learning and spending time at the National Fire Institute Center in Boise, Idaho, and learning from all these incredible professionals how wildfire works, where its threats are, where its benefits are, um, and how controllable it can be, especially if we think about it proactively. Because what I saw these groups of, I call them heroes, like these hotshot crews and the whole fire leadership team, and what they were able to do to change a fire, and they were using backburns, they were using hardening homes in front of the fire. So people, and they were doing it in the worst conditions possible and were successful at it. And so I came away thinking, well, if we could just do this before the fire got there, we would have such a leg up on these fast fires, these major catastrophe events.
Hmm.
And kind of shelved it at that. That was sort of the thesis of the stories I would write. And then fast forward a few years, I started an adventure travel company called Stoke Broker um, as a co-founder, and I was sort of the lead adventure artist. So did some entrepreneurial work on kind of the intersection between adventure and travel. Um, Exited that in kind of early 2023 to join the family business, which makes me, I'm now a fourth generation insurance professional. My great grandfather started an insurance company in Wisconsin in 1914. And
Hmm.
my grandpa carried that legacy on. My dad was there and then left there to start his own company in Idaho when he moved the family to Idaho, insurance company. And then, in 2015, he started the MGU in Hawaii, with my brother. And so they'd been working kind of on it. I was doing stockbroker and was kind of away. And in early 2023, kind of late 2022, these risk maps came out for the entire continental, or entire 50 states, and they were wildfire risk maps. And Hawaii found itself in the top 5. And this was late 2022, so before Lahaina, early 2023. And our carrier partner there at the time, Hyundai and Marine and Fire, wanted to understand why Hawaii was such a high wildfire risk. And we've traditionally been working in the hurricane only line, had some small book of homeowners insurance as well. And really, my brother and dad came to me and said, "What do you know about wildfire?" I said, "Well, I know quite a bit. I got the opportunity to work on these stories. And one of the coolest things about being a journalist is you get to learn from the very best, and you learn through a fire hose, and then you have to synthesize that and then relay that to readers and to talk about it. So you learn a lot." And I told them that, and they said, "Well, if you're interested, we need somebody to take on wildfire for us." And this was just the time we were starting to think about having kids, or we had one kid and wanted to have another, and my travel was getting a little bit out of control. And I really wanted to do something that had a lot more purpose than taking wealthy people on adventures, which, at some point, I ran out of gas with wanting to do that. It became very much a service industry. It felt like I was, working in a field I loved, in places I loved, but not necessarily with people I enjoyed working with. And so I jumped at it and I said, "Yeah, I'm going to dive into this insurance program, going to join the family business." That was 2023. Unfortunately, got about 6 months into our work, and Lahaina happened. And that was a real, I think, wake up call for Hawaii in general, but for insurance as well, because I think it just could have been avoided. I think a lot of what happened there could have been avoided if we would have gotten on top of it a little sooner. And it's unfortunate that people had to lose their lives and so much destruction. So that lit the proverbial fire underneath us to really focus in on this peril of wildfire conflagration. And we call it wildfire conflagration because wildfire conflagration is a much different peril than typical home fire, and also than typical wildfire. Because when we think of wildfire, we think of these walls of flames ripping through forests that are unstoppable and maybe necessary for a forest rejuvenation, and are caused by suppression, over the last century and all that stuff. But what conflagration brings to it is how these wildfires enter the built environment. And as insurers, that's the peril, that's the risk that is most dramatic and most concerning. Is how do these fires create multiple ignitions at the same time, overwhelm resources, and then go structure to structure where the assets become the peril, and it becomes a much different situation than a single home fire or not, and the conditions that cause these and the ignition points around them are very distinct. And I think the hardest part the insurance market is trying to struggle with is the engaging with this peril as its own entity, as its own peril, not connected to a fire policy that includes all this fire, because you're trying to understand it, you're trying to communicate all these things we can do to the built environment to prevent conflagration. And these are things we've known, certainly in the insurance industry, but in human society for a long time. We've created.
And I really want to talk more about prevention, because it's a little bit outside of our DNA in terms of like there is no feedback, right? We need that gratification. When you do an action, you see a result. Great, I know that I've done something. It's right, it's wrong. I can quantify it and say, great, achieve. When we are dealing with prevention, okay, you prevented it. It didn't happen. You don't know if something happened or not because the prevention worked. And then there is a question mark always in your action. And when it comes to insurance, the whole insurance is structured on something happened, here is a remedy. But how can you change the culture and the mindset? It's like, I'm going to bleed the money now. that is going into the not really loss ratio, but part of my expenses operation to prevent something. Do I know how much risk, how much I de-risked my portfolio? The risk that I took in
And
now by doing that? I have no way. There is no gratification. There is nothing that will tell me unless over the years I can compare it to historical data that will tell me, oh yeah, it used to be that bad, now it's less bad.
right. And I think that is a critical question. And I think that is where technology fills that gap. Right now, the insurance industry has access to the most advanced wildfire modeling, mathematical understanding, technology, as far as landscape analysis, risk analysis, all those pieces of software, all those programs, platforms are available to insurers. The problem I think that insurance has done is because they're so reactive, and they have been for a century plus, right? Like this, the old model is,
Since day zero. Yeah.
yeah, catastrophe happens, they pay you maybe, you rebuild the same way, and then prices go up to try to balance that. It's all very reactive. And models are being used in the same way. The only way these insurers are using these incredibly complex advanced models is to non-renew and cancel policies. Whereas what I think we can use it for, and what W.I.S.H is all about, and what the reps really try to put in the hands of the consumer, is the understanding that, hey, we can use these models to understand the efficacy of potential mitigation actions at a community, neighborhood, and even home level scale by inputting the data for the changes and then running ignition point modeling to see how a fire could react using all of our advanced technology, all of our advanced modeling systems and programs. That is exactly what we do, is we take a baseline level of risk, whether it's at your structure level, to say, hey, this is your current risk because of where you are located on this slope within 30 feet of your neighbors, this and that. These are the real things you can do. And I think the research and the understanding around those mitigation features and resilience actions are much more understood as risk reducers than a stochastic machine learning AI model that's giving you a rate of divergence of 10 to 15, 20% even, that nobody can trust, because you put your address in one model, it tells you one risk score. You put in another model, it gives you a completely different risk score. They're like scatter plots on any sort of thing. There's no consistency. And that's okay. Models are meant, they start with guess, they start with assumptions. That's how it's always been. Weather models are like that too. But I think how we use them to inspire resilience and to incentivize and support those features and actions that communities and neighborhoods and homeowners can take need to be communicated much clearer through the technology rather than just this black box of like, oh, you're beyond our risk appetite. We're going to non-renew you. You're stuck with going with the fair plan, paying a lot for not much coverage, right? And because you're in this zip code or because you're that, and there's no granular understanding. And that's where we provide technology to do that, to help you understand what your risk is as a geospatial position, to help you understand what you can do to your home and what your community and neighborhood can do to help create a community, resilience. And we can do that with technology. We can say, hey, here's your baseline, here's your risk analysis profile. If you change this, if you target these vulnerable areas of your community, if you change these roofs, if you create this defensible space, we run those models again, and then we get an after. And this is without any work being done. And we get an after, and oh, your risk has been reduced by 22.3% according to this model or analysis. So then let's take that 100, 200, $500,000 investment, create an action plan that's insurance driven, that's driven by the data that insurers need to create exactly what you're talking about, because there is no archival data. So we need this data to create some sort of understanding of risk reduction and efficacy for the features. And if we do that, and then our goal is to put that in the consumer's hands, to put that in the community leaders' hands, so they see it, they say, hey, we don't have to trim every tree to 6 feet in our entire neighborhood. We need to know where the fire is coming from, how fast it could get here, and where we can put what limited resources we have to create far more effective and efficient mitigation. So that's where I think technology can help us answer those questions, but we have to be proactive about using it, not just saying, hey, there's no archival data because this house didn't burn. So we don't really know what kept it from burning because the neighbor down the block burned, and like, how
Mhm.
do we figure that out? And they're starting to figure out there's few key pieces that really help reduce your risk. And they happen to be things that we can
No.
control.
Now, I'm sorry. So when you're saying archival data, are you talking about the HOA or the insurance companies? Because the insurance
Well,
companies has it
I
for
mean,
centuries.
right, and actuaries need archival data. They need historic
Yeah,
data. They like to have at least 20 years of it, right? And
at least.
what
Yeah.
you pointed out was that right now the insurance industry doesn't have 20 years of data
Oh no, no,
around
no. No, I said
mitigation.
no. I said that they do, but what they don't have, or it's more in the philosophical sphere of how do you value lack of risk based on prevention, right? So if you're more active on prevention, and you as a business owner or the whatever that the chair, the board, whatever, you go like, okay, we're going to allocate now $50 million for a prevention plan because we assume that it's going to save us 100 million, which, you know, equation business decision, it's very simple. I put in 50, I prevent a loss of 100. It makes sense. However, because there is, once you prevent something, it doesn't happen, you don't, it's very hard to rationalize it in terms, because you don't see it, it's not realized. But so it's very hard to sell it. At the same time, it's very hard to comprehend that you prevented it. Right? It's a little bit weird, but it's part of the internal irrational bias that we have internally in terms of how we perceive things and the things that we take. And then, of
It's
course, I need to go back into the insurance and the culture there in terms of remedy instead of prevention, and then we can get into all kinds of other elements. But
yeah.
let's go back to what you started talking about, the HOAs, and we talked about it in our previous conversation. In my personal experience here with my HOA here in Los Angeles, I live next to Mulholland. We have wildfires. I'm in the kind of the Santa Monica Mountains. I think it's part
Mhm.
of this ridge is part of it. Um, yeah, we have fires. And our HOA is like, oh, we need to make sure that everyone has a mesh that is 4 millimeters instead of 8 millimeters gap. So for the air vents that prevents what's it called?
Ember.
The amber to go into the house, and
Yep.
part of that
Yep.
conversation.
Yep. Yeah. No, I mean, I think, and I think that's where, as an insurance industry, we've failed in the communication of the value of prevention, of risk mitigation and risk management, which is at the base level of what insurance should be doing, is helping partner with communities, HOAs, you know, even their homeowners, and explaining why 4 millimeters reduces your risk much greater than 8 millimeters, because as a homeowner, you're like, oh, I mean, what's the difference? It's 4 millimeters, 8 millimeters. They're these small little things, but there's real meaningful research behind that the IBHS and various different CAL FIRE groups have consistently tested. And we found that vents are one of the biggest vulnerabilities in homes, especially older homes built out of timber, because they have these crawl spaces and they have these attics, and these attics and crawl spaces need ventilation. And ventilation is created by vents. And vents, when it's windy, take in the air. They're designed to take in the air. So you fill that air with embers and they get into your crawl space, your attic, and then there's nothing a firefighter can do because those embers, once they get in there, your kiln dried timber, certainly in the attic, catches as quick as anything, and then you have a roof fire, an attic fire, and no fireman, no firefighter is going to go in and try to stop that fire. It's they move on basically, right? Um, so I think it is complex, and it is the preventativeness of it is really difficult. But I think there is a lot of research, and I think models is where I've seen the most because you can be retrospective, so you can say, hey, here's the Paradise Fire, the campfire, right?
Mm-hmm.
We lost this many homes. It happened this quickly. This is, we have the models of how it happened. That's all fact. That's in the historical record, archival data, right? But what the models have been able to do in the last few years is say, hey, what if these spaces were defensible? What if these homes were made of this material? Or, they can do some hypothetical understanding of changing of conditions. And then it affects how that known fire model that they've applied the actual fire and then how it behaves. And I think that's where we're getting a lot of this understanding and filling a lot of these gaps of how effective mitigation, home hardening, especially we're learning on a community and neighborhood level how important that is. How you're not on an island, certainly if you're not in a denser populated area, that you're only as safe as your neighbors. And that's something that we've
Mm-hmm.
found a lot of understanding in Hawaii because of their Ohana kind of community culture.
Well, I'm looking here at the Palisades, although people,
Yeah.
one of our neighbors used to be in the Palisades, moved 2 houses over.
Yeah.
It's a community that most of them had to leave Los Angeles, but that's a different story because they couldn't find an alternative place to move into. That I'm sure that they could have, but it didn't really fit in terms of location, cost, quality, etc. But they ended up just leaving the city and the state, like many others, but for different reasons. But it's part of a community that was destroyed, and it's a great. I love that approach. It's like, let's look at the HOA, let's look at the community, not just the insurance company or the county or the state, but let's look at the different communities and how they can actually work. But which reminds me, because that's part of the hub in the name of your company, we didn't introduce your company properly.
Right.
We already,
So,
Jara, how many minutes
yeah.
we are in? We are like 20, almost 30 minutes in.
Yeah.
What's the name of your WISH, right? But
Wish.
that's the acronym. So
That's the
what's the name of the
acronym for.
company? What do you
Yep.
guys do? And then what is the hub part of it?
Excellent. Yeah. Thank you very much. So, WISH stands for Wildfire Insurance Solution Hub. It came about, like I was saying, through our Hawaii business and understanding hurricane wind as a single peril and really saying, hey, let's look at the engineering. Let's look at the wind speed up in Hawaii. Like, we can't use a typical southeastern US mainland hurricane model for wind in a small island state like Hawaii, which has heavy topography, and is a very small landmass in a very big ocean. So, understanding a single peril, taking it from that, we are engaging with the wildfire insurance crisis on 3 different levels. So, WISH is the hub. It's a technology platform that uses 3 or 4 different associate technology providers, software providers, to create RAPs. RAPs are another acronym. It's Wildfire Risk Analysis Profiles. And the goal is to really do exactly what we've been talking about, to share what the insurance company and underwriter will be looking at for your home with the homeowner or with the community or with the neighborhood, so that they're both looking at the same thing. And then we can say, hey, we've leaned really heavily in with our product in the value of mitigation. We believe the research, and we are far more impressed or certain about that research around home mitigation features and community resilience building and that stuff, rather than trying to pick a model out of the many. Some are more expensive than others, some are not, but they're all starting at stochastic guesses. We haven't been able to find any reinsurer that wants to use, a single model or even trust any of the models as far as just pure location prediction type of thing. So we created the hub in order to do that, to increase transparency, to try to start building trust, and to try to get some of the technology out of the black box back room that's just being used to non-renew and cancel policies and into the hands of the communities, neighborhoods, and homeowners who can take action, trying to create a clear return on investment, not just safety and well-being and that stuff, but saying, hey, do these things, invest this, returns come in reduced premium costs. Um, and that is as clear of an ROI as I think can be provided around, like you're saying, a very sort of difficult topic to express because people are scared of fires. They're really scared of wildfires. They're extremely scared of wildfire conflagrations. So they don't want to believe it. They want to believe that it happens elsewhere. They don't want to think about it. They don't want to deal with it. And I think that's where, as the insurance industry, we do have a really unique role to play. And I think this is for climate adaptation and resilience across all the perils. But for us, we're talking about the climate-driven peril of increased wildfire conflagrations, right? And I think of all those climate-driven perils, wildfire conflagration is the most manageable, is the most controllable when we talk about reduction of risk through built environment features and actions and stuff like that. So W.I.S.H exists to do just that, connect insurance availability and cost directly with wildfire mitigation on the home, neighborhood, and community levels.
How do you work? So, how do you work with the MGOs and the carriers? Right, you talked about your family's business, that element, but how do you work with others within the ecosystem and the industry?
Yeah, it's a good question, and we focus on working with carriers to help them understand their wildfire conflagration exposure. So they provide a list of addresses to us. We run our risk
Well,
analysis profiling technology hub through them. They understand what part of their premium currently would have to be allocated for just the wildfire conflagration risk. And
mhm.
then they're able to communicate through us using our wraps and using our underwriting technology to the consumers directly, because I think that's where there's been a big disconnect too, is communication between the insurer and the insured. And we really operate on that piece and offer, most of our potential clients would be small to mid-sized carriers who don't have the resources or internal staff to create a wildfire underwriting and risk analysis program. So they're just usually following the big guys, and then you have a State Farm or an Allstate pull out of a market, and all the mid-sized carriers also stop selling in that market because they don't want to get the adverse risks. They don't know exactly why State Farm is pulling out, but they're not going to be the ones who are going to be jumping in behind them. We're helping give them the tools, empowering them and their agents to become active participants in wildfire resilience and management. And then we're creating a primary carrier. So if they want to, we'll take that risk off of their books.
Because I'm looking, most of us can imagine how it works from the homeowner or the renter side, right? I need insurance. Someone sells me that insurance, or I go online. There will be a checkbox if I am usually your zip code, you are not eligible. Sorry, they will give you some nice legal nicety about. Oh, we apologize. However, we are not selling this type of coverage in your zip code or region or whatever, because as you mentioned, they put out. That's from, let's call it, the user experience or the prospect policyholder experience, which they will work, or they will use an agent broker, they will run off and go back and it's like, yeah, this is what I have for you. These guys are out, these guys are in, that's how much it's going to cost you. And oh, you also need wildfire insurance. And you go like, do I really need to? How much does it cost? Yes, okay. I'll add it. No idea what it means.
Mm.
But
Well, I
so
think,
it's, yeah,
yeah, I mean,
it's a,
I think it's
Mhm.
important to point out that a lot of people, certainly in California, don't know much about their insurance because it's done through their lender. So if you have a mortgage on a home, the mortgagee, the lender, is more often the one who is going out to get insurance because it's not your home. It's you don't own it. So like the main risk carrier on a home mortgage that has anything, more than 10% of the value of the home currently on it or something like that has to be insured. Usually the lender requires insurance. Just like if you buy a new car,
Mhm.
you're required to carry a certain amount of insurance until
You
that's paid off
cannot,
and then you can change it, right?
yeah,
Like
you cannot get a
uh,
mortgage if you don't have insurance
if
on
you
the
don't
top.
have
Yeah.
insurance. And I also think independent agents have really gotten pinched on both sides of this because they are getting told to non-renew longtime clients by their carriers. And every one of those non-renewals takes rice out of their bowl. Like they lose that commission.
Yep.
So they're very motivated to just say, oh, where can we put them? We have to put them on the fair plan. And then it just gets rubber stamped. And you've seen this huge unsustainable growth in the fair plan. Then we saw the fair plan break well and truly, shatter. They're still trying to pick up the pieces. Meanwhile, it's growing at a continued astronomical rate around the state. Um, and so, the more I learn about the fair plan, the more that I talk to people and trying to sort through it, the more I think that it's as big a part of the problem as wildfires themselves here in California, because it's allowing, I guess it's needed because people want to sell and buy homes. And without insurance, you can't do that because of what we were talking with the mortgage and the mortgagee. But it's really not helping communicate preventative measures. It's really not helping people understand the difference between a home fire risk of your ion battery blowing up in your garage compared to an ember driven windstorm fire, fast moving fire that ignites multiple homes at once and stuff like that. Um, and it's confused the market. And when the market's uncertain, when the insurance market is uncertain, what happens? They just don't sell. They stop selling.
Hmm.
That's their response to uncertainty or to loss. And I think and they raise their rates, but California's made that really difficult for admitted carriers as well. So the
Yeah.
result is they pull out and you get the situation that we're dealing with now. And look, I think the insurance industry has a massive public relations hole to dig itself out of.
Oh,
It's
most
not new.
definitely. And
It's
and
been,
that's
yeah,
and the other side of my question, I kind of describe, the user experience from the buyer side, from the homeowner, but then there is the other side, which is the reinsurance and the carrier. That for them it's all about, okay, we have this risk. Um, let's pull out from California because it will remove that bad risk from our portfolio. And what else can they do? For them, it's a bunch of numbers and
it's math.
de-risking. Yeah,
It's
it,
it's
it's
math,
big
and
Excel sheets.
math can be brutal and it can be cold and it can be unfeeling. And in many ways, that's an unfortunate reality of our current insurance industry and how homeowners insure. And we've created these legacy package policies that are done by county or zip code at the most granular level, and try to incorporate all of these different risks into one package policy. And they've been successful at that. And so they don't want to change the way they're doing it. But then you get something like wildfire conflagration comes in. It's a peril they didn't plan for because these legacy package policies were designed and built and sold, 25 years ago, maybe even more. So they haven't reacted. They haven't changed to the changing climate. They haven't changed. They're inflexible. It's an incredibly
But that
inflexible system. And
But
so
that's
that's
also
where
on the regulator, right? Because the regulator,
it is
it's
on
kind
the
of driven
regulator.
from retail insurance in a sense that we cannot, as a regulator, it's like you need to make everyone insured. So I cannot give you the ability to have a better resolution into the personal aspect of each individual. So we're going to block it at the zip code. Now, as you mentioned, and I love it, it's like you have your own geospatial area. You cannot change it. This is where you are. Now let's do small modifications, right? So this is your zip code. This is where you are. Although you can be facing the river, you can be facing the forest, you can be facing the dry creek or whatever that may be. Now, what can you do? And here we can step in and tell you how you
Yeah.
can prevent it.
And the thing that we can certainly do is get much more granular and understanding risk by a parcel, structure to structure level. And the technology is there. We have all of that. What we don't have is a system that allows for that, because these legacy carriers, like you're explaining, don't care to do that. It's an and I think that's where there's a huge opportunity to innovate and grow and move this industry and society forward together, is by
I'm
creating that transparent link that helps people understand their granular level risk of their parcel, of their home, of their structures, and then communicates that directly to the insurance underwriter who will be looking at this risk. And instead of saying, oh, it's in this zip code, we can't do it, it's saying, yeah, it's in this zip code, so their starting rate's going to be higher because there's, their risk is higher just off of
Mhm.
GPS spatial location. But if we separate out that peril, that's the only really risk that is elevated. Your risk for hail, your risk for, um, flood, your risk for all these other things. Most California homes are great risks. Where they're not is in this lack of understanding of parcel level, community, neighborhood level risk for wildfire conflagration. So it comes back
Yeah.
to, if we separate that risk, all of these homes become very good risks and can stay in a very affordable section of the market.
No,
But
it's
because
a.
we
Now, sorry. Finish your, please
no,
finish your sentence.
because we have to attach this wildfire conflagration, which in many ways is like a cat risk, and
Hmm.
you're trying to reinsure it as a cat risk, but on a homeowner's policy, which reinsurers don't love because they have all these reinsurers like, and are much more interested in low frequency, high severity events, because then that's what they're betting is that they're not going to happen. So they like that lower frequency. And wildfire conflagration, while the frequency is increasing, is a far lower frequency event than even a convective storm, certainly than hurricane wind, you know, definitely less than flood even, So there's all these reasons why we need to separate this peril, not only because it's community peril and kind of community level peril, not only because it's the most manageable and there's so many things we can do to our built environment to prevent multiple ignitions happening at the same time. There's so much we can do as far as like, how do we fight these fires? So, from early detection and notification to suppression and autonomous drones and and then there's mitigation, and those are the three things. And there's an incredible amount of money pouring into all of those. And what the insurance industry needs to do is to connect what we know about detection, notification, suppression, and mitigation to insurance availability and costs in a much clearer, easier to understand way. And then the insurance industry has this unique ability to be both the incentivizer
Yeah.
and the enforcer. We can be the carrot
Hmm.
and the stick, and we're not beholden to, oh, an Idaho building code that's dated and isn't, this and that. But I passed all my Idaho building codes. That doesn't matter to an insurer. We get to put our own codes on what we're willing to insure. And so you can incentivize behavior on a much larger level than if you're trying to just go home by home or county by county. Both those miss, the efficacy of saying, hey, work together,
I'm. Mhm.
understand your risk, mitigate it using the technology, informed by technology, driven by the data, so that then we can have a before and after picture to take to an insurer and the actuaries and everybody they're working with to say, these mitigations reduce the risk this much on these models. We're going to blend that and then create a program that if they execute that, just like workers' comp. I don't know how familiar you are with workers' compensation, but workers' compensation
Familiar.
went through a really dramatic availability crisis in kind of, I think maybe it was the late 80s, early 90s or something like that. And it was the least profitable line of business in the entire industry. Major insurers were closing down, not offering it anymore. And it was because they just were trying to pay for and plan accidents rather than mitigate that risk or manage that risk. And so risk management came into the fore. And now workers' compensation is probably one of the most profitable lines of business in the entire industry because of the value of risk mitigation and risk management. And I think that's where insurers, our technology, our history, everything need to play a much bigger role because we have the experience. We are risk managers. And if we look to partner with communities, homeowners associations, homeowners, and use the partnership to increase resilience, everybody's going to win. If we only try
Yes
to
and
cherry
no,
pick
but yeah.
which risks and not do any outreach and just be very transactional and it's just business, it's a transaction, they pay us, we give them insurance, there's no
Yeah.
partnership there. It's just and I think that's where the insurance industry has failed, especially around wildfire.
So I have so many problems with that, and I agree with you in so many other levels. Because I'm thinking about, we kind of HOA and a kind of, let's call it the super energetic people that we have here with the extreme example of a very active member of our community that her Prius is full of Bernie Sanders stickers,
Okay.
still, right? But
Yeah.
that's kind of, the irrelevant excitement that that individual has.
Mhm.
And at the same time, it's like, yeah, now, set the rules, enforce the rules. You're going to de-risk it based on certain elements, and you're going to suffocate and make our life miserable, right? Today, when you
Yeah.
work, if you're doing this, you need to have this vest and that vest, and the color needs to apply to that standard and ISO, whatever. And you cannot step out of the car without a helmet and a hard toe boot with
Wow.
the two different harness. And you go like, holy shit, I just want to, you know, climb on
Live.
the two-step ladder and change a light bulb. No, 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 no. You need to go through all this protocol, a mindless, numbing thing, so you can do that. Now, on a bigger picture, you go like, yeah, because I don't know, one out of big N, there is an accident and you're going to fall down and break your leg, break this, whatever the harm, and it actually improves it, and we shift the gauze, the
Yeah.
curve a little bit to the left, and it's going to be a little bit better. Now, there is a line between being a fanatic and a zealot of, okay, now everyone needs to have, uh, well, the 4 millimeters actually it's a good example for actually something that there was research, and it's a very easy fix. Go up, fix it, come down. And I don't want to tell you how many things but then it will be so many things that you need to adhere to, and there are HOAs that, yeah, they're a little bit on the wrong side of, instead of, yeah, it's a community, let's enjoy and think, but a little bit more
Yeah.
on the compulsive element of it. Um, Having said
And
that, we have that
yeah.
on the insurance that, as you mentioned, they have the stick. They can set up the rules, and we've seen it mainly in Europe, been driven and led by the bigger insurers that say, we want you to adhere to our environmental code. As a result, if you're not up to into these standards by this year, we are not going to provide you with marine and whatever non-marine insurance for this stuff. Why? Because that's it. This is what we decided, and you're out of business.
And we're a
Right?
private company.
There are carrot and stick are a little bit of a challenge.
It is a challenge. I think it's the biggest challenge that the insurance industry faces. But the insurance industry is also the only private public type entity that has the ability to do both outside of very lengthy municipal code changing process and very kind of, because insurance at the end of the day is not political, and everything else around an HOA or municipal codes or anything else becomes political. And it doesn't matter if it's politics inside
Indeed.
your local HOA or national politics playing out in county or zip code or whatever. We have to separate that. And I think what the insurance industry can do better is communicate, educate,
Yep.
and share their data. Certainly
I
with those
love it.
folks that they're using that data to judge through insurance availability and cost. And I think
I love
if
it
we
because that's
focus
a
on
right
that,
approach.
that's the only way. It's the only way. And we, our program, our features are kind of, we have a very specific, we call it a feature underwriting and rating approach, which is a FURA, if you want more acronyms, because the insurance industry is full of
Of
them.
course.
So I feel
Yeah.
like I spent a lot of time. But what that does, and that was developed by us in Hawaii for things that make homes more resilient to wind. And there's a lot of things in Hawaii that people didn't understand, like open foundations. Like, oh, we want to be off the ground because it gets wet and, the foundation. But if you're off the ground and a 70-mile-an-hour wind comes in and then is sped up through that small opening, it lifts your house right off your stilts and it dumps it. And it's a total
Yep.
loss. And all of a sudden, your single wall home, but it really had nothing to do with being a single wall. It had to do because your foundation was up on stilts. You had space underneath your foundation. It doesn't matter if your home was built in the 50s, you can do things retrofit to your home to help that roof become fortified. You can replace the shingles, you can add SoFit joints, all the things. These are things that people can do. And in the same way with Wildfire, you can't, that's where I think IBHS falls short, because they're kind of all or nothing. They're saying you need to do all of this to get any sort of credit, right? Because we're not sure how to price one feature or another. And for us, we got around that by saying, hey, there are these different levels, there are different buckets. There's a very good, low cost, high impact level. And that's stuff like vents, gutters, 12 inches of cladding, non-flammable cladding on your siding, and zone 0. Those things.
Sorry,
Sorry,
go
I
ahead.
don't want to keep rambling, but
No.
those are things that you can do fairly DIY, fairly quickly, fairly inexpensively. And we can look at those. And if you put those in place, you're a type of homeowner we want to insure because you're making steps to do it. Now, are we going to insure you if you do those things and have a cedar flake roof? Probably not. Like there's limits to that. But we're certainly going to give you the premium credits for that if you do it without having to change your siding, or, you can't change your proximity to your neighbor. You can't change your geospatial position. So we're trying to focus on things people can change and engage and start with that, and using these wraps that help people say, oh, wow, I'm at risk. No wonder I got non-renewed. Now let me figure out how I can reduce that cost by reducing my risk. And I think that's the education, that's the communication piece that W.I.S.H, I think, is very innovative about. I think our understanding of it is flexible and has grown with our growing understanding of these wildfire conflagrations, and that makes me really kind of bullish about how effective this program can be
Hmm.
if people are willing to listen. Right now,
So,
there's
Keith,
some people who aren't willing to
I'm
listen.
sorry. I'm sorry that I cut you. I cut you here because I
No
realized that
problem.
this has been an awesome conversation. I didn't even notice, but we are almost an hour in, and
Yeah,
I try to keep it like at 30 minutes, 45
sure.
minutes the most. But and we didn't even talk about your time with the Rolling Stones. We
Yes,
touched a little bit about ski, about Boise, Idaho, and I really wanted to know what's so charming about Boise because I heard a few folks from here from Los Angeles that wanted to move there, especially during COVID. But people during COVID moved everywhere, which wasn't
everywhere.
Los Angeles, mainly Austin.
Yeah.
There are so many other things, but uh, kind of let's do. We started with the last question at the beginning, so let's do a different last question. What's next for you? Who would you like to reach out to you? Topic of conversations, but what's next?
Yeah. Right now, we're really focused on raising the policyholder surplus so that we can represent our own primary carrier. We can find our own reinsurance around just the wildfire conflagration, and we can work with primary carriers operating around the Western region and the U.S. in general to help underwrite um, and insure higher risk wildfire exposed, conflagration exposed properties.
So
We
maybe I missed it at the beginning. You have that you do technology. You're
we
also an
have the technology hub.
MGU.
We have an MGU. Yep. And then we
Uh,
have the primary uh, carrier that we are hoping to raise a significant policyholder surplus so that we can get a good financial rating and start working with some of these small and mid-sized admitted carriers across the Western region who are just, in our opinion, frozen because they don't have access to the type of granular parcel level risk data around wildfire conflagration that we can
oh wow,
offer.
you almost took the entire hierarchy, the entire vertical. Sorry. Um, which states are you in, or where do you want?
So currently, our first product was filed in Hawaii. And that's where our existing MGU is. So that is kind of, and that's where we'd probably domicile our primary carrier. Um, we think Hawaii is a really interesting state for a number of reasons. We have great relationship with the department there and a really strong, successful track record for working in single perils and protecting consumers there in Hawaii. The
That's
next spot
critical.
would be that
Mhm.
we're targeting is California. We'd like to participate closely with the newly formed clearinghouse committee that is tasked with depopulating the FAIR plan. There's over 700,000 current FAIR plan policies out there in the state of California, and we'd like to take 20,000 of those in the first 2 years for our primary carrier and take them with participating um, homeowner policy, and we work with that carrier to create a business to business relationship that covers their cat exposure for wildfire conflagration that then we reinsure separately and insure based on our definition of that. Nevada is really interesting because they just passed a statute that allows insurers to carve out the wildfire peril from their homeowners policies, which fits really well in us stepping in for a mortgagee or somebody and providing that piece of their risk and working with them directly as like a almost a separate policy or as an endorsement, so we can kind of work on our own there. But I'd really like to talk to anybody, especially regulators, to explain why we feel like moving wildfire conflagration to its own peril and its own understanding and its own rates and everything is so important to the market and to consumer protection. Generally, we get a lot of kind of resistance to this single peril approach because the understanding is, oh, they'll just opt out of it, just like most people do for earthquake or a lot of people do for flood, which are other single peril type policies. And the reality is that no lender is going to lend on a typical insurance policy without wildfire conflagration in the Western region, certainly not in higher risk or more wildfire prone areas. So then working to say, hey, by providing this, we provide clarity, transparency, and insight and education, communication, all those things to the homeowner. We attach it to a price to try to incentivize, create that carrot. And then we can also enforce if needed through our technology and consistency of maintenance and all the kind of validation and verification that we use and the tools that we use to validate and verify the work. So really starting to talk to California regulators and trying to get an understanding of, do we need to keep home fire, smoke, internal explosion, and wildfire conflagration all as our basic FAIR plan? And that's okay, but we need to be able to rate them differently. We can't just try to rate it all, because then the discounts you can offer for home mitigation for wildfire conflagration are extremely diminished to the point where nobody even cares. They're like offering you $20 a year to make a $20,000 investment, right? Like there's no ROI there. There's no reason for someone to do that. So really trying to help broaden that consensus of, hey, this is a very new, or we're a newly understood, or we're gaining a new understanding of this very distinct peril of wildfire.
To wrap it up, I'd like to build a consensus and be able to communicate why we think looking at wildfire conflagration as its own peril, whether it's within a package as a peril rating or its own understanding outside, like a FAIR plan or California Wildfire Authority or whatever they're going to do with it, but really start talking at the policy level, saying, hey, this is a solution. This is a way to think about it. There is precedent because of what Hawaii's done with hurricane as a single peril and what Nevada has just created for wildfire conflagration as a single peril. And really also then build the consensus through the scientific and research community and wildfire science about the efficacy of these mitigation features and resilience actions at the community level. Like there is a lot of understanding. There's a lot of research out there. I do think we need to kind of communicate that and create more understanding and a consensus that these mitigations really do matter. And they matter a whole lot more than what one stochastic AI model is telling you compared to another, and getting the industry to pay attention to that, getting the capital markets to pay attention to that, and getting the regulators to really pay attention to that, I think is it's a very ambitious
It's a key.
challenge.
I think it's key, and it's key, and there is, I think, more and more awareness in California. And don't forget, it is a political appointment. And you mentioned earlier that while there is a political element, it's also a community and a financial decision. Each one has its own little incentives there and interest, but there is much to do, right?
It's much to do, and
yeah,
insurance industry has a big role to play in that, and
yes.
I'm encouraged in some ways about the conversations we're having and the people we're working with, and the companies that are very proactive and forward thinking. And then it can be really frustrating because not every company is like that. And often the bigger they are and the more powerful they are, the less like that they are. And I think, but I also think there's a generational entrepreneurial opportunity in insurance currently that has not existed before. You need an old
that's
system.
A little bit more challenging there because you have the entrepreneurial opportunity. We are 9 years in, there've been a few different waves. The first wave that went IPO kind of I don't know, spoiled the water. I don't want to use other words for that, but and it's a little bit bitter water now in terms of changes. There are there is a new cycle coming in, a new wave. At the same time, I would say that Hippo were the first one that took like the prevention approach, and they didn't really manage to be successful there because of their IPO and where they are today now. So by bad association. It's not, but there is more and more understanding that prevention is the de-risking, and technology, that's the way to go. I would love to see more numbers, because at the beginning it's like, well, let's see what we can handle. It's like flood, not flood, water damage. That was like the easy path to take. Fires are a little bit challenged because, as you mentioned, it's outside of your control, and it's very hard to measure something that you prevented because it didn't happen. But sadly, I need to stop with that, because we went so much overboard, and we can actually talk more and more and more and more. Kitt, it was
great conversation. Really appreciated your insights and thoughtfulness, and the more we get people talking about this stuff, the better. So if you ever want to do it again, or if you have specific questions that I can
most
help
definitely
answer,
listen.
Would love to come back on and kind of give you an update as we move this into the market, and I can kind of provide more understanding about how consumers are engaging with our technology, where we're finding blocks or bottlenecks. We're just starting the beta. We've got the technology platform and hub built, and now it's about deployment and depopulating that FAIR plan, giving people an alternative that isn't an outrageous extra and surplus lines cost, and working with these trusted regional and local insurers to empower them and their agents. I think the independent agent force has been vastly overlooked about their strength and their community connection.
The agents and the brokers are critical. They are, while people look at them as the intermediaries, no, they are kind of the backbone or the glue that makes it happen. Because between the carriers which is basically big models of big Excel models and data, etc., and let's run this, and from reinsurance to ILSs, etc. At the end of the day, you go down. It's like, okay, how do you actually communicate?
Yes.
Who is there to sell the insurance? Those are the broker and agents.
Those are, and getting them the education. I'm extremely excited about.
And we need to give a shout out to the wholesalers as well, because you have the wholesalers who are actually specialized in those specialty products, who will go and actually educate the brokers how to sell this insurance. Exactly. And that's another element that a lot of people. There was a point that I was looking, okay, what will be my next startup? And I was like, I need to build a digital wholesaler, because that's a way, and set up different incentive, take a little bit cut off my end, give it actually to the retailer, because it makes more sense. It will a certain structure. And I was like, it's all about, it cannot be digital. That's a point.
Yeah.
There is so much personal element that you need to be as a wholesaler, as a broker, that just being a digital wholesaler, that's not the solution. And I haven't figured out what's the right approach. But again, I've been an investment banker for 3 years. I'll still wait before I jump to my next startup.
No, there's a lot of ways to do that. And we think by empowering them with the technology, giving them access to the type of technology we're offering, making sure they can create these wrap reports and share them and understand them, and then really understand why the mitigations matter. And I think that's all stuff that technology we can empower, but we can only empower those people. We can't cut them out. I think the more you hear about AI wanting to de-staff or dehumanize the insurance experience, we look at Lemonade, we look at Hippo, look at where they are. They're just, they tried to outsource everything to technology, and it's biting them in the ass.
I need to add a correction. Hippo never tried to throw out the human. They're actually on the contrary. The Lemonade, yes. But there were many jokes at Lemonade at the beginning. Hippo tried to make it more personal. They actually, from the beginning, started working with agents. They provided also the direct, but that's not that has been a very lengthy goodbye. Kitt, I apologize.
No problem. I have to go too. Thank you for your time. Let's stay in touch. Please let me know if you need any clarification or any documentation or anything to
again,
move forward.
It's not me. It's the audience.
Okay.
But anyway.
Okay.
Ciao.
Okay.
Thank you.